British American Tobacco is planning a bold move in the US market by launching a version of Velo nicotine pouches using synthetic nicotine. This marks one of the first major steps by a big tobacco company into the world of synthetic alternatives. And such nicotine could potentially be stronger and cheaper to produce in the long run. As traditional smoking declines, the future of nicotine seems to be shifting. British American Tobacco projects that the US nicotine pouch market will grow from $2.2 billion today to an impressive $9 billion by 2030. That is a 309% growth. Meanwhile, vape industry revenues are also expected to surge from $11.7 billion to as much as $18.1 billion in the same period. That is a growth of 54.7%. What does it mean for the industry and for investors? Well, let's analyze British American Tobacco, let's value its stock and see, can we make money from this shift? If you were to invest $1,000 into this company 10 years ago, you could buy around 18 shares, and now they would be worth something close to $614. Not very impressive. But luckily, this company also pays dividends. So in that time, you would get $466 as dividends. So if we add together the current value of shares and the dividends, we get $1,080. And that is a gain of 8% in 10 years. Not the best growth. Of course, it would be much better if we would reinvest the dividends. And if you would like to learn more about reinvesting and different strategies connected to dividends, then go to stockinvesting.academy and see our dividend investing course. Individual insiders, that is a check 10.4% of the company is owned by individual insiders, and we would like to see this number over 2%. So that is very good news. The management should take good care of the shareholders because they are the shareholders. And are individual insiders buying? That is a check. In the last year, we see a lot of buy transactions from insiders. And do super investors own this company? That is a check. There is one super investor, and it is First Eagle Investment Management. And are they buying right now? That is a check. They bought 57,000 shares in the recent quarter, so they added almost 8% to that position. Return on invested capital, that is an X at 9.1% 10-year median returns. And we want to see this number higher than 10%, so close, but not close enough. And what do we know about net profit margin? It is also an X, averaging 9% over 5 years. So that may seem like a nice net margin, but the industry median is 14%. So when we put that into perspective, it's not that great. And now let's take a look at share buyback. It is yet another X. They issued 17% extra shares in the last 10 years. So they are diluting long-term investors. But it is worth pointing out that recently British American Tobacco has executed a share buyback program. Not on a massive scale, but since 2021 the trend is changing and they are buying back some stock. And the debt? It is an X. It would take 3.5 years to pay the long-term debt with a current free cash flow. And we want to see it under 2 years. So it is a substantial problem. Well, it's interesting. We have only X's when it comes to financial health, but nothing here looks really really bad. But also nothing exceeds our expectations. Revenue growth, that is an X at 3.3% 10-year compound annual growth rate. And we would like to see the number higher than 10%. So the growth is really slow. Free cash flow growth, that is also an X at 7% in the last 10 years. So much better, but still not good enough. And finally, earnings per share growth. That is an X at 0%, because recent results when it comes to earnings are negative. But what is interesting, it does not mean that British American Tobacco is losing money. We see a negative number because they announced something called a goodwill impairment of approximately $31 billion, which basically means that the company recognized that some of its previously acquired assets, mainly in the US tobacco market, are now worth significantly less than what they were recorded for on its balance sheet. And British American Tobacco's adjusted earnings per share, which excludes such one-time changes, showed growth of about 5.2%, indicating that business remains profitable when excluding these extraordinary items. The dividend yield is 8.6%, so shareholders can expect to get $2.95 annually per every share. That is a huge dividend yield and something we should definitely take into consideration. And the payout ratio, that is an X at 52% of cash flow, so over 50% that we like to see. And if we would use earnings and not cash flow for this calculation, it would be negative because they are reporting a loss. So no matter how we look at it, it is an X. And what about dividend growth? It is a check at 4.1% 5-year growth rate. That is a decent growth, but we have to remember that it is influenced by currency fluctuations. So it is just another factor to take into consideration when planning our dividend strategy. Let's value British American Tobacco by using a discounted cash flow formula. And to do that, we will have to predict its future growth. So in the low scenario, we will estimate no growth for the entire 10 years. In the medium, 2% for the first 5 years and then 1%. And in the high scenario, 3% and then 2% growth. So the low scenario is showing a story in which British American Tobacco is not going to grow at all. Medium is predicting that it will grow slower than the industry, so below 2.6%, and the high one is anticipating that the growth will be around the industry average. So with such estimates, the intrinsic value in the low scenario is $47, in the medium $54, and in the high scenario $60. But we have to always apply a margin of safety to those prices. I use a 30% one. And with such a margin, we get in the low scenario $33, in the medium $38, and in the high one $42. And the current price is around $34. So only the low scenario with the margin of safety is in the red. British American Tobacco seems to be rather cheap right now. Okay, so this company has a very appealing dividend, the price is nice, and insiders have a lot of skin in the game. On the other hand, financial health is not the best. The growth is very slow, and of course we always have to take into account the regulatory problems that may emerge in this industry. It is not an obvious situation, and it really depends on your investment goals and strategy. If we go to our Stock Ranking Pro and choose Company Overview, we see that financial health and growth are not where we like them to be. But dividends and investor sentiment is a different story. And if we filter the ranking to show only tobacco companies and we sort it by overall score and valuation, British American Tobacco is on the top spot. And when it comes to dividends, they are doing great. They have the highest dividend yield, the same as Imperial Brands, lowest payout ratio, and highest dividend growth, which is also the same as Altria's. So even though there are a number of warning signs, there is also a lot to like about British American Tobacco. And if you would like to learn more about Altria or Imperial Brands, then check out my videos analyzing those companies. Thank you so much for watching and see you in the next one.